The S&P 500 just put in another all-time high close after putting one in yesterday as of the time of this recording. So two all-time high closes back to back. Now, what does this mean for the stock market going forward? Do we typically see a huge pullback after making a new all-time high close? I'm going to get into that for you in full detail. And I'm also going to be discussing the top stocks to buy right now, or the top stocks to look at right now. We're going to be going over Tesla, Amazon, Google, AMD, Nvidia, and I'm going to be giving you a bonus because you guys always ask me about PLTR, and as of the time of this recording, it just suffered a 9% or 10% drop today. And then we're going to be getting into SMCI, a stock that I told you was likely to break out ahead of the February 25th deadline, which is the deadline that they have to file the NASDAQ paperwork. So we'll be taking a look at all that. I respect your time. All of the timestamps will be in the chapters below. Let's get right into it. So as I said, the S&P 500 made another all-time high close. If we're taking a look at the SPY just closed at a high of 613.23. Now, what does this mean for the market, right? A lot of people think that once we hit all-time highs, we tend to retrace. That is simply not true. The S&P 500 has a habit of continuing up to varying degrees depending on what's going on. So I tracked this all the way back to the middle of 2023. New highs, we went up 6.34% before a significant decline or significant pullback. We see this here, 14%, 7%, 3.7%, 1.2%. So it is not the case that we tend to see a pullback immediately after an all-time high. Plus, the theory or the thesis that I was describing to you in my last video is the same as it is now. Still, Amazon, Microsoft, if you take a look at this, Amazon is down year to date. Microsoft is down year to date. Meta is the only one that is up year to date out of the Mag 7. Tesla is down year to date. Nvidia is kind of flat year to date. The Mag 7 are not, these aren't the stocks that are pushing the S&P 500 to all-time highs. So I still think that that remains true. Not only the fact that I think the Mag 7, most of the Mag 7 will come along in the form of all-time highs, but that will likely push the S&P 500 to all-time highs. So even at a conservative, like I said, varying degrees here, right? So even if we take a conservative approach and just project out 2% from here, another 2% from here before a pullback, we're at around 62.50. Remember, we just hit the 100-day moving average in January. January 14th, we were at the 100-day moving average. So we don't typically revisit that immediately. Now, the market is also showing signs of still being risk on. If you look at stocks that are high beta stocks like Tempest, which we actually did buy calls on. If you look at Palantir, yes, it is overvalued. It was trading at 100 times sales. By far the most expensive stock in the S&P 500 at 100 times sales. If you take a look at the quantum stocks, they're still doing really well. Crypto for now is still up. So if you look at Bitcoin, it's still hovering in that $97,000 range. My point being is that the market is showing signs of being risk on, even though inflation came in slightly higher than expected last time. But as I said, the market will accept slightly higher than expected inflation as long as it's not above and beyond that 2 to 3% range. So if we're still hovering in that 2 to 3% range, we have shown time and time again, as I showed you in my last video, that the market simply does not care about these slight increases in year-over-year inflation, right? So if we're expecting 3.2 and it comes in at 3.3, the market is not really going to care. And the only reason I know that is because of data. One other thing to note here before I jump into the individual stocks, but the Trump tariffs, the one smart thing that I think the Trump administration did this time as it relates to tariffs is they did not impose it on the markets immediately. So, at first there was obviously the tough talk about tariffs on Mexico, China, and Canada. But then the tone was tempered a little bit, sorry. And now the administration is saying that they are going to put in reciprocal tariffs. So whatever the countries charge us, we're going to charge them, and that the tariffs will not be in place until April 2nd. So kind of kicking the can down the road, leaving a chance for optimism for the market to gain a little bit of optimism that, hey, maybe these tariffs are just a negotiating tactic, and maybe the countries that are imposing tariffs on us will come around and either lower their tariffs or we'll accept the reciprocal tariffs and we'll be on balance with these companies, at least as it relates to trade, or these countries, at least as it relates to trade. So I think that was one of the smarter tactics is delaying the tariffs so that we don't just throw it onto the market and the economy immediately. And that gives room for negotiation until that April 2nd date, which is why the market is not reacting in the same way that we did to the 2018 tariff, something which I covered in previous videos showcasing that we almost hit a bear market in 2018, all because of the trade wars. You can see here, this is where the Trump tariffs came in from the first term, and the S&P 500 or the SPY went from 295 all the way down to 233, hitting the 200-day moving average, almost sending us into a bear market. But because we've seen the 2018 tariffs already, and we do have some experience with that, also because of that delay, that April 2nd delay, I think the market is digesting this fairly well, albeit in the beginning of January after the inauguration, there was some of this volatility that we saw here when the S&P hit the 100-day moving average. All right, so let me get into the stocks and give you some ideas of how to trade this stuff. So Tesla hit the 100-day moving average here. Tesla at this level, you can see here, what do we see? A lot of consolidation. This right here is a very, very heavy level for Tesla. Even if you go back to 2022, you have a lot of consolidation at this level. You can see even more consolidation back here. This right here, if I just take a square or rectangle, sorry, and draw it out, this right here is a heavy level of consolidation, right? So it's no surprise to me that Tesla is just chilling here, waiting for a market catalyst. Now, we know that we have some of the major AI catalysts coming later in the year, and Tesla does tend to suffer in Q1 and Q2 of usually of the year, right? Q1 and Q2 going all the way back 4 years are usually very weak points for Tesla before we hit that summer rally. Now, for me, I still think that Tesla without any catalyst could still come down to that 275 range. At the 200-day moving average, we have resistance, 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 support, right? So this is also a major level for Tesla. We also have an unfilled gap here. I do think that there is a chance without any catalysts, right, that Tesla could drop to that 275. So with that said, one of the things that you could do here is you could sell a put on Tesla. And I'm using Public, by the way. This is by far my favorite broker. I've talked about them time and time again. Based and regulated in the US, not only are options trades free, but you get rebates on your options trade. So every time you make an options trade, you get a piece of the order flow. So it's better than free. If we go out to April 17th, which is the April monthly expiration, and you go down to that 270 level, that 275 level, you could sell the 275 put for $330. So if Tesla hits that level, and it's at that level by expiration, you'll be assigned 100 shares of Tesla at 275 minus 330, which is 271.70. Otherwise, you get to keep 100% of this premium here. And this is only the 7 delta for Tesla, meaning that there's roughly a 7% chance that 275 hits. So if you're feeling freaky, you could go even higher. You could potentially sell the 300 put on Tesla if that's what you're willing to pay for it, for almost $700, and this has a almost 15 delta, which is usually where most option sellers would hang out at, a 15 delta. Now, I personally would not buy calls on Tesla here. I don't mind shares at the 100-day moving average. We already did put an announcement for shares at the 100-day moving average, picking up shares at 330. Shares are now at around 365, which is a nice little increase of $35 per share. But like I said, Tesla can fall without any major catalyst until we get those updates on FSD, on Robotaxi, and on Optimus, which will be coming June and later. So between now and June, we need some sort of catalyst. Otherwise, Tesla could suffer even more stagnation. All right, Amazon. This one is super interesting to me because Amazon has just been a killer stock. I mean, right now, Amazon is reporting $187 billion a quarter in revenue. It is generating more cash than ever from operations at $45.64 billion. This is the most ever. Its net income year over year has increased 88%. And like I said, this is by far the most revenue that the company has ever reported. But from a technical perspective, it is now below the 50-day moving average. Now, we tend to see stocks pop below the 50-day moving average sometimes, or below any of the major moving averages, before coming back up. Now, while I do like a dollar cost average here on Amazon, even though it's not the greatest price, we did pick it up in the 150s back in August of 2024 when we had that Japanese currency scare. There is one level that I'm really focusing on Amazon here, and it's this 215 level. So I've told you guys my swing trading strategy. Same thing could be used in order to find price targets. But if you look here, we made a high at 215. That same high was gapped up, right? We gapped above it. And you can see that we retested this level as support. So that 215 level is really important. And by the time the days move along, this 100-day moving average can come up to that 215 level. So that is the level that I'm eyeing Amazon, and I would consider maybe some aggressive call option plays, either leaps or short term. I don't know, but that is the level that I'm really looking at Amazon, is that 215 level. Google, very similar story, that this is the highest revenue that Google has ever reported. This is also the highest gross profit and net income that Google has ever reported as well. And it is the most cash from operations that Google has ever generated. It is also much less expensive than Amazon in terms of PE ratio. This is actually a pretty low PE ratio for the Mag 7 in general, but also for Google, trading at 23 times earnings. Now, Google is at a point at which to add shares for the long term, for sure, especially trading at 22, 23 times earnings. But this level here, that 182 level that I marked out in a previous video, you can see the resistance here. You can see the support here. You can see that we have a gap here. So this level for sure is a dollar cost average level for me, for Google. It is also about 12 or 13% down from highs and near the 100-day moving average. Now, one cool thing about Google here is you can sell options here on Google at a pretty lucrative premium based on this price. So I'm happy with that 182 price on Google, but if you wanted to collect more premium, you could, and potentially get the shares for a better price, you could sell the 180 put for $4.65. If you're assigned, then you're assigned 100 shares of Google at 175.35. You could even go further down if you wanted to get assigned for a much lower risk. At the 170 level, you could sell these for $2. For instance, you'd be assigned 100 shares of Google at 168. This right here currently has a 17 delta. Obviously, if you don't get assigned, then you just keep the cash. So it is a pretty decent revenue generating strategy as well. Now, one thing you can do is, if you wanted to be more aggressive, you could certainly buy month out at the money calls, right? Especially since they did already report earnings, but you can buy the 185 calls a month or so out, but you would have to put a tight stop below that 181.80 level, below here, in case Google decides to come down and fill this gap, which it doesn't always do, right? But in case it does want to do that, you will want to put a tight stop below this 181.80 level and then revisit that idea if Google hits around 176. And I'm sure you guys may have noticed, but I switched over to using Public for my investing as well as my option swing trades and selling cash secure puts. It's a regulated broker based here in the US. Now, the reason that I like it over other trading and investing apps is because not only are the options trades commission free, there are no commissions or no contract fees for options trades, but you also get a rebate for stock and ETF options trades. The rebate means that options trades are not only free, but you also earn money. They are less than zero. Now, the rebate is based on your monthly trading volume, so the more you trade, the higher your rebate is per trade. And for any cash that I'm not using, I could just throw it into a high yield cash account that they have and earn 4.1% on my money. Now, AMD, this is the super interesting one because a lot of people that I see are piling into AMD from my casual viewings on social media. A lot of people are piling into AMD here, and I don't know if that's a great idea. AMD is the advanced money destroyer. It loves this freaking trend line. I've never seen anyone love anyone like AMD loves this trend line, okay? This trend line has been established since October 2024. Look how many times it has revisited this trend line, always wiping out people who think that this is a market structure break or that this is a market structure break or that this might be a market structure break, right? You do not want to engage with AMD here like this. What you want to do on AMD is you want to wait for a confirmed breakout, not a stupid little wick, not a little candle, but a confirmed breakout, and then hopefully a retest of a previous break level, right? That is what you want to do before going long on AMD, because very easily AMD can hit this 100 level here, right? We have a daily fair value gap here that is juicy and unfilled and just waiting like a Venus flytrap for something to land in there. And I could easily see AMD get rejected off here into this daily fair value gap, right? Now, it might not. It might surprise us and pop above. But if that's the case, then it's already confirming to you that it wants to break this long-standing trend. So for me, I would not buy AMD here until it breaks and retests, or until it gets rejected in this daily fair value gap. And then I'll be a happy buyer between the 100 and 105 level. Obviously, another thing you could do is sell puts on AMD. If we go out to, you could go a month out. Let's see if we go to March 21st, because it has been beaten down so much. You can sell the, it doesn't pay that well, does it? I was going to say you could sell the 100 put, but it only pays $63. You can sell the 105 put for $1.36 or 136 bucks. You can also go out to April 17th and sell the 105 put for around $2.60. This is probably what I would opt for if I was going to sell puts on AMD. Otherwise, I would wait to see if it can break this and do our break and retest. And once it breaks and retests, then I would consider buying calls, because I think once AMD breaks out of this on the daily and retests and wants to shift structure, AMD is going to run like the wind. AMD, not obviously it's an advanced money destroyer now, but don't discount AMD's ability to go absolutely nuts. Back in 2023, it went from 95 all the way up to 227 so quick with barely any pullbacks. Even when it pulled back here in August 5th, it went from 122 all the way up to 174 so quick. So don't discount AMD's ability to absolutely run. And also AMD for the future, I am bullish on the company. Right now, it's a very far second in terms of American GPU companies, right? You have Nvidia and then you have all the crumbs. But I think AMD is going to figure it out. They're slowly scaling, and once their GPUs really hit the market and they figure out how to scale, I think AMD will eventually accelerate and start catching up to Nvidia. They'll still be a far second in my opinion, just because of how far Nvidia is in the market. But I think that AMD, from a fundamental standpoint, will be that definitive second player in the American GPU market. Nvidia, I gave you guys Nvidia in my video. I also gave you the swing trade idea in the traveling trader trading and investing floor. And this is a simple break and retest here. This was a beautiful play. We broke out. If we pull up the moving averages, I've been tracking this for you guys on the videos ever since we had that DeepSeek news. But once we hit the 200-day moving average, we broke above this very important level, right? Resistance, resistance, support, support, support. This is a very important level. We broke out and it gave us the gift of a retrace here to that 129, and we bought calls on Nvidia and we ended up closing those for 71%. And by the way, if you want access to all of my trades in real time, link is in the description. I go live at market open every single day. You do not want to miss it. At market open, every day I go live and give you my futures day trades as well as my option swing ideas. And then I post the option swings here in the Discord like this, as well as my long-term stock alerts and my option selling. So this is by far the most complete group on the internet, in my opinion. We don't only day trade futures. We don't only trade options. We don't only sell options. We do it all. But that was an absolute gift. And you can see here Nvidia popped above the 50 and the 100-day, and we are now retesting this level. And I think that you can re-enter here buying calls at this level here at around 135. But we did fill this gap, and I think what's next for Nvidia are these equal highs at 153. I think Nvidia does eventually go up, break 153, and create new all-time highs. My midterm target on Nvidia is 163. But this is a lovely break and retest of the 50 and 100-day convergence level. All right, Palantir. So I get asked about this all the time. Now, Palantir is the most expensive stock in the S&P 500. It is trading at 106 times sales, or at least was before this drop of 10% today as of the time of this recording. Now, the drop coincided with two things. There was Alex Karp announcing that he was selling over $1 billion worth of Palantir stock. You can see here Palantir CEO Alex Karp's new plan to sell 1.2 billion of stock, which is quite a bit for one person to sell, right? I think it's the smart move here, especially trading at these astronomical levels. And two, the Department of Defense announced that they were scaling back 8%, I believe, every year for the next 5 years. So they're spending less on defense, meaning that the exuberance of Palantir's potential growth is likely coming to a little bit of a slowdown here. Now, what level am I looking at? I think Palantir will drop to this level here, the 50-day moving average, but you also have this resistance here at 85, this resistance here at 85, and this gap here. I think this is where Palantir is coming to. But even at this dropped price, it's trading at 98 times sales. Just to give you a perspective of how crazy that is. What is the average price to sales ratio for stocks in the S&P 500? It's in the single digits. It's like 3, I bet. As of February 19, 2025, the S&P 500's price to sales ratio stands at approximately 3.16. Now, even in the insane .com era, which is much crazier than now because these companies couldn't justify their valuations, right? I just showed you Amazon and Google's metrics, for instance, in terms of their sales. We're talking about hundreds of billions of dollars. But back in the .com era, they weren't doing that, right? And even in that era, Amazon's highest price to sales ratio was 66 times sales. Now, the craziest price to sales ratios recently have been these stocks here: Snowflake, Zoom, Zscaler, and Shopify. And you can see the effect of that crazy price to sales. Now, Shopify has redeemed itself. Even if you look at Shopify now, Shopify is trading at a more respectable 18 times sales, which is still really high, but it's not 100. So with that said, I think Palantir is going to drop to that 85 level, in my opinion, at least. And then SMCI, I'll give you this as a bonus. You heard it here on this channel when I told you guys that it was breaking out of this trend line here. Now, SMCI is a great company. The only thing that SMCI had a mark on was its accounting, which is a pretty big thing to fail on, right? So its previous auditor, I think it was Ernst & Young, if I'm not mistaken, but its previous auditor said, we're done. They fired their client. They said that we can't, reconcile the books on SMCI. That's obviously, crazy news. And SMCI went from a high of 123 to a low of 17. Now, they did hire another auditor since, and they said that they should have their paperwork in line by that February 25th deadline. So they have until February 25th in order to submit their paperwork to the NASDAQ in order not to get delisted. If they get delisted, that'll be terrible, because that means that they will turn into a pink sheet over-the-counter stock, and it will absolutely kill their liquidity. It means you can't buy and sell it in the open market. So if you look here at SMCI, we broke out of this. Now, I'm going to jump into the metrics a little bit, but We broke out of this on SMCI, and is $58 too expensive? Here's why I was telling you guys at the outset that I think SMCI is a great business with a good valuation. Even here, right, if we look at its price earnings, even here, it's only trading at a 23 forward price earnings. SMCI is expected to make a F ton of money in the future. They're not a chip company, but they build the racks that house the GPU clusters, right? So based on their forward business, based on their future expected business, they're only trading at 23 times earnings. And this is after this insane price run of, what is this, 130% just in February. Their price to sales, remember when I said Palantir is 106? Their price to sales is 2. Their forward price to sales is 1.37. They're still very cheap, even considering that crazy that crazy price jump. Now, here's what I think might happen. If you missed SMCI, if you missed my videos on SMCI, here's what I think might happen. I think SMCI on the 25th could actually have a sell the news event. So two things can happen, right? There's only two things that can happen on the 25th. Either they file the necessary paperwork or they miss the deadline. Both things I think can force a sell the news event, one worse than the other. So if they miss the paperwork, then I think that SMCI is not even worth buying yet in the open market. And you'll know if they miss it because obviously you'll have the news beforehand. 2, if they file the paperwork, they already said last earnings that they were ready to file the paperwork. So that is kind of expected and part of the reason that the stock went up 130%. So if they file the paperwork, then I think what can happen is a sell the news effect, because part of this rally was based on them saying that they were going to file their paperwork. So if SMCI can drop back to this level here, right, you can see this level here, then I think it is an absolute screaming buy. So if they file their paperwork and they drop back to this level being between 46 and 50, right? Then I think SMCI is a screaming buy, in my opinion, based on their valuation currently and their expected growth. Anyway, traders, that is it for this video. Get yourself a public account below. Sign up if you want to trade live with me every single day and get all of my insights. You guys have already seen me give you Uber, Costco, Nvidia, Tesla, SMCI, ASML, and many more. So if you want all of these alerts in real time, link is in the description below. Let me know in the comment section, what are you buying here? What are you most excited to buy? Let me know if you got into SMCI. Let me know what you think of Palantir's valuation here. Would love to hear from you. Subscribe to the channel, hit that notification bell. Stay safe out there, traders. Peace.